Hello and welcome back to Explain the Charts. Today, September 16th, we're delving into the S&P 500, specifically the SPY ETF, to uncover the current market sentiment and potential future trends. The past week has seen a significant rally in the stock market, with major indexes like the S&P 500 and Nasdaq Composite enjoying their best weekly performance of the year. This surge is driven by positive technology stock performance and a growing expectation that the Federal Reserve will implement interest rate cuts to stimulate a slowing economy. However, as we approach the Fed meeting this week, uncertainty persists regarding the magnitude of the rate cut and its implications for the future of the market. Will we see a 25 basis point cut, or could the Fed opt for a more aggressive 50 basis point reduction? Some analysts believe a larger cut could signal a worsening economic outlook, while others view it as a positive step towards supporting growth. In today's video, we'll dissect the current news and events, then meticulously examine the SPY chart, looking at various timeframes to find any correlations between the market data and the recent headlines. We'll pinpoint key price levels, identify support and resistance zones, and discuss potential bullish or bearish scenarios. This in-depth analysis will provide you with insights into SPY's current position and potential future direction, empowering you to make informed trading decisions. Let's begin by analyzing the daily chart for SPY. Here, we can see that SPY has been on an upward trend in recent weeks, with prices breaking above several resistance levels. This indicates a strong bullish sentiment and suggests that the rally has the potential to continue. However, there are some potential headwinds to consider. The recent spike in prices has brought SPY close to its all-time high, which could act as a strong resistance level. If we zoom in on the past few weeks of trading, we can observe that the price has been consolidating around the 560 level. This suggests that buyers and sellers are engaged in a tug-of-war, and the direction of the market may be determined by the outcome of this struggle. Looking at the news, we can see that the recent rally has been fueled by a combination of factors, including positive earnings reports, a decline in inflation expectations, and anticipation of interest rate cuts from the Fed. The Fed's decision on interest rates will be a crucial factor in determining the market's future direction. A large rate cut could further boost the rally, while a smaller cut or even a pause in the easing cycle could lead to a correction. Therefore, it's essential to keep a close eye on the Fed's statements and market reactions to their decisions. The news and events related to the Fed's meeting will likely be the main driver of SPY's price movement in the coming days. Now, let's take a look at the 1-hour chart to get a more granular view of SPY's recent price action. Here, we can observe a series of higher highs and higher lows, confirming the upward trend. There are some interesting patterns emerging in this time frame. For example, we can see a potential bullish flag formation occurring in the recent session. This pattern indicates that SPY may continue its rally in the short term, but it's important to remember that flags are often followed by a breakout, which could be either bullish or bearish. The current level of support for SPY is around 558, while resistance lies around 563. If SPY manages to break above the 563 level, it could signal a strong continuation of the current rally and potentially lead to further gains. However, if SPY fails to break above resistance and instead drops below the 558 support level, it could indicate a reversal in the trend. This is a crucial area to watch in the short term. Let's now zoom in on the 15-minute chart to see if there are any other clues that can help us predict SPY's near-term direction. Here, we can see that SPY has been trading within a relatively narrow range in the recent session, with prices bouncing between 559 and 561. This suggests that the market is in a state of indecision, and it may be difficult to predict the direction of the next move. However, the current level of support for SPY is around 558, and if we see a strong break below this level, it could signal a short-term downtrend. On the other hand, if SPY manages to break above the 561 resistance level, it could indicate a short-term rally. In the short term, it's crucial to monitor these levels closely and observe how the market reacts to them. If the price action breaks outside of this range, it could provide a strong signal of the market's direction. The 15-minute chart can be helpful for identifying these short-term breakouts and making tactical trading decisions. To recap, SPY is currently in a bullish trend, with prices having broken above several resistance levels. The daily chart shows that SPY has consolidated around the 560 level in recent weeks, suggesting a battle between buyers and sellers. The 1-hour chart reveals a potential bullish flag formation, hinting at a short-term continuation of the rally, but with the possibility of a breakout in either direction. The 15-minute chart indicates that SPY is currently in a state of indecision, with prices trading within a narrow range. The key price levels to watch are the 558 support level and the 563 resistance level. If SPY breaks above 563, it could signal a strong continuation of the rally. However, if it falls below 558, it could indicate a reversal in the trend. The Fed's decision on interest rates will be a major factor in determining SPY's future direction. A large rate cut could further boost the rally, while a smaller cut or a pause in the easing cycle could lead to a correction. It's essential to remain vigilant and monitor the news and market reactions closely. By observing the price action around these key levels and staying informed about the latest developments, you can make informed trading decisions and capitalize on the opportunities that arise in the market.